Welcome to the first AGM of Fair4All Finance. For those of you that don't know me, my name is Richard Collier-Keywood and I chair Fair4All, and it's my pleasure to welcome all of you here today. I think we've over 130 people attending and we're also making a recording of this session. I have to say that one of the few benefits of the current pandemic is that it's forced many of us to be more technologically proficient. Well, we certainly hope so, and the next hour and a half will prove that one way or another, I guess. And one of the consequences of that, I think, is that many more people can attend sessions like today, so we can update you on our progress and our future plans. So thank you all very much for joining us. We wanted to make today as interactive as possible, and there'll be opportunity for the last 20 minutes of this meeting for you to ask questions. In order to do this, please could you post them in the chat? You can actually make a posting in the chat at any point during the meeting. If we don't manage to answer all of them live today, then we will answer them as soon as we can after the meeting directly back to you. I wanted to now specifically welcome our board, our team, our shareholder, the Oversight Trust, and many of our partners and stakeholders who I know are attending today. By way of background, Fair4All Finance was founded in February 2019, and our mission is to support the financial well-being of people in vulnerable circumstances by increasing access to fair, affordable and appropriate financial products and services. We're funded as a result of a directive by the Secretary of State for the Department of Culture, Media and Sport to make 55 million available from the England portion of dormant asset funds. And in May 2020, we were delighted to be awarded a further 41 million out of those funds. They are made available to us via the National Lottery Community Fund. I was appointed founding chair, and in September 2019, we appointed Sasha Romanovic as our CEO. I'm pleased with the diverse skills and experience of the board that we've assembled to provide oversight and governance. You'll understand that during 2019, our main focus was on getting the organisation operational and setting an initial strategy for the deployment of our funding to deliver on our purpose. As an organisation, we have a number of core beliefs, including firstly, that financial products and services can and should serve people in vulnerable circumstances. Secondly, fair financial products and services should improve people's well-being. And thirdly, that financial inclusion is the responsibility of the whole financial services sector. In terms of the way we work, we want to work transparently and to share our learnings with the whole sector. We want to work in partnership with others. We aim to be agile and innovative in the way we approach our work. And we specifically want to recognise the great work in financial inclusion that many people have done in advance of our formation. So what follows from that is that we want to convene and not duplicate existing work that's going on. So moving on today to our agenda. First of all, Sasha will introduce some of the members of our team, and they will then collectively highlight what we've been focused on over the last year. We're then looking forward to a panel session to look at the context in these current uncertain times. I'm pleased to welcome Diane Burridge, Chief Executive at Moneyline, and Sean Williams, Director of External Policy at Toynbee Hall, who will both be speaking in this session. Sasha will then take some time to set our future strategy and priorities. And last but not least, as I said before, we're going to allow plenty of time for questions at the end. So without me saying any more, over to you, Sasha.
Thank you, Richard. And as Richard said, we really set ourselves up to be very agile and collaborative. So we actually have a pretty small team. It's actually grown during lockdown. When I took over as CEO, there were 3 employees, and in January there were 6, and now we are 9/10 as we really respond to the situation. So what I wanted was an opportunity for each of the team to introduce themselves and also just give you a little bit of insight into, if you want to get in touch with us, who's the best person, so you can go right to the person who can make the most difference for you. So with that, I'll hand over to Tom.
Thanks, Sasha. Hi, everyone. It's good to see you. My name's Tom Lake. I'm Head of Strategy and Policy at Fair4All Finance, and I also lead our systems change and impact workstream. So that all means that I try and work out what we do through our strategy, and I also lead in our policy positioning and our relationships with government. So if you did want to talk to me, I'd love to talk to you about long-term financial inclusion policy in the UK. I'll pass over to Hanadi.
Thanks, Tom. Hi, everyone. My name is Hanadi, and I'm the social researcher and advisor for Fair4All Finance. I work across a number of different projects, but primarily I work in impact, so both in how to capture our impact as an organization, as well as understanding the impact of affordable credit and financial services on people in vulnerable circumstances. So if you'd like to talk impact or are interested in collaborating on future research, please don't hesitate to reach out. Over to Finn.
Hi everyone, I'm Finn. I'm the Policy and Strategy Advisor, which means I work on the development and delivery of our programs and try and take what we learn there and turn it into policy. So that means if you can talk to me about what needs to change in the policy or regulatory environment in order to improve people's financial well-being or for fair financial services to thrive.
And I'll go next. So the voice everyone can hear is Holly Piper. I know you can still see Finn, but it'll flick onto me in a little bit. I'm Investment Director at Fair4All Finance, and I'm responsible for our investment and grant programs. And that means if you're hopefully if you're an affordable credit provider on this call who've been supported through either our COVID grant fund or one of our pilot organisations, or we apply to the next round of Scale Up, hopefully you're already in touch with me. I know I've spoken to a huge number of you over the last few months. And actually, if you're another kind of, if you're an investor or a funder and really interested in kind of funding and investing into the sector, then I'd love to hear from you as well. Over to Jonathan.
Hello everyone, I am Jonathan Turner. I lead on our technology strategy. So that means that I'm working with financial organisations, with technology companies and with fintechs to help those sectors that we're working with to optimise and better use technology. So if anyone's got any great examples of how technology has transformed their business for the better, or is facing challenges where you think that technology might be the answer, please do get in touch with me. And I'm going to pass over to Becky.
Thanks, Jonathan. Hi everybody, I'm Becky Claydon. I'm Director of Operations here at Fair4All Finance. I take the lead on developing and managing our people, our processes, our systems. Hopefully you can hear me. Please come and talk to me if you'd like to find out about how we're growing and building our team, how we're adapting through COVID, and also how we're organising and planning our work. I'm going to hand over now to Temi.
Afternoon everybody, my name is Temi. I'm the Executive Assistant and Officer Marketing Coordinator, so my role is to support the team with managing diaries and just helping us work as efficiently as possible. So if there are any members of the team that you'd like to speak to, do drop me an email and I'll see what I can do to make those meetings happen. I'm now going to hand over to Georgia.
Hi everyone, I'm Georgia Cooley. I've recently joined as project manager at Fair4All. So I'm working across a range of projects, everything from the COVID grant fund to the no interest loan scheme pilot. And come and talk to me if you have any kind of thoughts or feedback if you've been working with us on projects around process. And last but not least, I'll hand over to James.
Thank you, Georgia. Hi, my name's James Cork. I've recently joined Fair4All as our Strategic Communications Manager. That means I look after all of our external communications, so from our website and our PR, through to also trying to help the team communicate consistently our messages to all of our different stakeholders. So I'd really like to hear from you if you'd like to share any of your stories. We'd really love to spread the word about lots of the good work that's happening out there already. Thank you. Back to you, Sasha.
Thank you, everybody. And it's amazing. We practiced that, as you might imagine, in terms of a team session. It felt as tense as when you're watching the UK 100 meters relay team going around the track where the baton always gets dropped. So I would just like to thank my amazing team, because the baton kept going around the circuit and we arrived in one piece. And so hopefully you can see just like what a great team that we've got. We've deliberately kept really small and focused, because at the heart of our work is making sure that we are a catalyst to bring together a lot of the great work that's happening already in the sector, and make sure that we're really focused on the areas where we can be additive and develop areas that without us existing just wouldn't happen. So what we wanted to do now was just do a little bit of a look back. Sometimes Winston Churchill said you have to sort of look back to see how far you've come. And I know that it's something I recommend to anybody who's been sort of doing things through COVID. One thing I think you'll be very clear on is none of my team have had time for baking banana bread throughout the whole COVID situation, although I think a few jigsaws did get done as we went along the way. So our first year has really been spent getting an absolute focus of understanding the landscape and working with others to get real clarity as to where we can make the most difference. And we already started with a very clear sort of baton handover, if you like, from the work that had been done in our setup, which was saying, starting with affordable credit, because actually high cost credit and the impact that has on people in vulnerable circumstances was actually a real pain point and causing significant issues for far too many people in the UK. So we started with that area, working with Esme Fairbairn on developing a theory of change. And out of that came some of the key initiatives that we've actually worked on over the last year. So what I'd like to do is really give the opportunity for some of the team to just talk through some of the areas we focused on, what we've been able to do so far, and little insight in terms of what impact and what we've learnt from it. So first of all, I'd like to hand back to Tom, who will just take us through why we focused on affordable credit and what we've been able to do and learn working on our pilot programme. So Tom, over to you.
Thanks, Sasha, that's great. I can confirm that I've baked no banana bread during lockdown, but that's probably like not just because of COVID. So thank you. I think one of the most significant things we've done over the last year is work with community finance providers directly and affordable credit providers directly through our Scale Up program. And we started this about this time last year with the goal of creating sustainable change and growth in the community finance sector. And 5 providers came and worked with us on this, and we're really grateful for them for being pioneers on this process with us. So those are Moneyline, Fair4You, Leeds Credit Union, Enterprise Credit Union, and 5 Lamps. So the aim of this was to both scale those providers and also to try and prove how community finance could be sustainably scaled across the UK, so not just in those providers alone. And we've learned an incredible amount since then from working with those providers. And I was just going to highlight 3 of those things that we've developed out of that program. So firstly, we've defined a code of practice for good affordable credit provision. And you can find this in our Transforming Affordable Credit report that we published earlier this year. So this outlines the care that an affordable credit provider gives to customers at every part of their credit journey. So it's not just about the price point and that being affordable, it's about the care during collections and recovery and being supportive throughout that customer having a relationship with the provider. It's also about being a gateway to other parts of the social sector where that customer needs particular support. So that can be a gateway to debt advice services or income maximisation services. And we see this code of practice as the fundamental framework that an affordable credit provider could adopt to get to a way to sustainably serve customers in the right way. The second bit I wanted to highlight was the impact that we're already seeing coming out of this program. So we've specifically made investments or in either equity or grant in all of those 5 providers, and we're already starting to see the benefits of those investments in the community. So recently, Fair4You, who are one of the organisations on the program, published an impact report, and that was conducted by the Centre for Responsible Credit along with Hanadi from our team. And there's some really, really powerful stories in there about the positive benefit that this type of credit can have on customers. And I was actually just refreshing on that this morning and looking across the quotes, which I'd recommend doing, but there was one that stood out around a woman talking about not sleeping well and being worried about when she was going to work because she'd leave her sons in and she'd be scared that debt collectors would knock on the door whilst her sons were in, and she didn't kind of trust that process or what would happen to them. So she'd tell her sons to not answer the door whatsoever during that time she was at work. But after working with Fair4You and taking a loan out there, she said that her stress levels were lower and she could go to the office without worrying about what would happen to her kids. So that's just one story where there's a really, really powerful impact of a good credit product. And there's lots of stats in the report too. And the one I was just going to highlight was the fact that since 2015, when Fair4You was founded, that they've saved over £2 million for the NHS in direct costs through having benefits on customers' health and well-being. So this is from like reductions in the use of GP services and hospitals reported by customers because they're less stressed, they might be sleeping better, they're eating better because they have a better credit product and they're less worried about their finances. So it's clear that the benefits of the right financial services product go way across into the rest of society, and it's not just limited to this area. Lastly, I just wanted to highlight 5 areas that we've adopted as an organisation on the way to sustainably serve customers in this space. And we've adopted those 5 areas as our kind of internal operating model, but also they're the ways that we're going to work with providers going forward. So they're systems change and impact, and that's the way that organisations evidence their benefit. Markets, customer insight and product design, and that's all about designing products to serve customers with specific vulnerabilities and then adapt those products to cater for those vulnerabilities. Operational excellence, which is all about getting the right systems and processes and technology set up to deliver at scale. Governance, leadership and talent, which is about getting transformational leaders in place and a pipeline of those to take this agenda forward. And then funding, finance and investment, which is about getting the right capital to providers so that they can scale their provision. So we'd like to work with organisations across both the social and commercial financial services sectors to develop out these areas, to share best practice on them, and to use them to really scale the provision of the right financial products and services to customers so that many more customers can have the benefit that I identified just then with the Fair4You report. So those are just a couple of things that I wanted to highlight, and I'll now pass over to Holly, who's going to talk about some of the more specific funding and programme elements.
Cool, thanks, Tom. Yes, as Tom said, I'm going to just talk about 2 kind of very specific examples of things we've done in the past year. And the first one is one that was, well, in no one's plans and certainly not ours, which was our response to kind of COVID-19. So when kind of the COVID-19 crisis kind of really became serious kind of back in March, our key aim as an organisation was to sustain affordable lending capacity in this market. So kind of Hanadi and our team did some research to kind of map which kind of customer groups were most financially impacted, and we kind of very quickly understood that, and it's kind of what we've seen borne out, that the number of customers in vulnerable financial circumstances unfortunately was going to grow and was going to grow kind of very quickly, and that things were going to get worse for those customers who were already in vulnerable financial circumstances kind of when COVID-19 kind of hit. And whilst some of the government interventions have been really welcome there, such as the furlough scheme, certainly kind of for those kind of, you know, with the least money and the lowest income are finding it a real struggle. And so we kind of understood that actually what we most wanted to do was to make sure that the affordable lending capacity was kind of sustained, preserved, grown as much as possible so that these customers could be supported as much. So we very quickly set up the 5 million COVID-19 resilience fund. I say we, this is actually before I joined the team, which means I get to be glowing about how amazing they all were and how quickly it got set up. So the fund was set up and had made and deployed its first grants kind of by the first week of May, which I think is incredibly impressive. And hopefully lots of you on this call kind of received COVID grants to really kind of support you over the kind of the last few months. So this grant funding was for both kind of financial support and also technical support. So financial support to kind of bolster lots of the lost income, and technical support to kind of enable affordable credit providers, so credit unions, CDFIs, others, to kind of, you know, buy new laptops for teams who are suddenly working remotely and kind of things like that, which were kind of really, really important as we all responded kind of to this crisis as quickly as possible. Now, as of last week, this fund has made 3.6 million in grants to kind of some 28 organisations. And we've now had the opportunity to kind of really look at actually what difference has this grant fund made to these affordable lending kind of organisations over the last few months. So we know that overall in kind of the affordable credit sector, lending has gone down. It went down a lot in kind of April and May and is now kind of going back up. But we know that from our grantees, lending to vulnerable customers went down by far less. So that lending capacity was much better preserved. And the grants that we've made so far are to organisations which collectively lent over £129 million last year, serving 130,000 customers. And we can be really confident that actually our grants have helped to preserve about half of the affordable lending capacity targeted at people in vulnerable circumstances, which is a really key aim of this grant fund. Whilst those stats, those numbers are kind of, you know, quite impressive, I think kind of want to share a couple of examples of actually what have these organisations done with this grant money to really support customers. It's a huge range. So some credit unions have made emergency loans to members right at the beginning of lockdown to bridge the gap between paid work and universal credit, so that kind of delay as jobs weren't early on in lockdown, in some cases before the furlough scheme kind of kicked in. Many affordable credit providers have increased their loans to single parents with dependent children who had to cope with additional fuel and food costs during lockdown. And some have used this grant money to support the introduction of new, really needed products. So Clockwise Credit Union, for example, has introduced a key worker loan. And so these are just a handful of examples, but hopefully kind of give you a sense of actually how we've tried to support the affordable credit sector kind of over the last few months. And I've got another very different example. So something that was in plan kind of for the last year, which is just a bit more detail about kind of, you know, I guess our approach to investment in the pilot organisations. So Tom mentioned the kind of pilot organisations, and we've made two big equity investments so far. So one is in Moneyline, and I know you'll be hearing from Diane, Moneyline's CEO, a bit later. And the other one is Fair4You, which Tom touched on just now because they've published a fabulous impact report. And I just wanted to talk a little bit around actually why we made these equity investments and kind of why we think that's actually hopefully a really good thing to do kind of going forwards to really kind of bolster that affordable credit capacity. So Fair4You, ambitious, high impact social lender, providing customers, majority single mothers, with affordable loans to buy essential household appliances, so fridge, cookers, washing machines. And they, in common with several other CDFIs in particular, had received social investment loans from foundations and social investors to finance their growth. But financing costs are too high, the balance sheet was extremely weak, and they needed significant restructuring to grow. And so Fair4All Finance, well, we're delighted that we've been able to make a £5 million commitment to a new perpetual bond. So this is a new affordable long-term financing with an interest rate that reflects the social impact performance, which means that in this case, Fair4You can access more affordable finance provided they can evidence their social impact, which they've now started to do. And we're particularly pleased that it's kind of in this perpetual bond, several of the existing foundations transferred their debt investments to this bond. So it wasn't just our money, but it's also working with other existing investors to really kind of take a fresh look at what social investment was most needed to support this future growth. And now we hope it's really well set up. So it's all very strong demand through COVID-19, so increased its lending. And Tom touched on the social impact report. I get to pick my favourite stats now. And so they found that actually customers save £30 a week on average when they're supported through a Fair4You loan, and that 70% of customers are able to stop using high cost credit. I know we've talked a lot about one in particular, CDFI. We're hoping over the next year in particular to make several other substantial equity investments to support the affordable credit sector to grow. And as part of that, we're really looking forward to working closely with the whole financial services sector to increase access to fair, affordable and appropriate financial products and services. I'm going to hand back to Sasha.
Thank you, Holly and Tom. I was just being asked if I could adjust my lighting. So if I'm really bright, it's because the sun is full on pelt, and I did all sorts of wonderful things. You know, sometimes you see those things online where people have done random desk setups to try and make it all perfect. I did all of that and it's completely failed, but I'm bathed, hopefully, in a golden glow, which I think sort of sets us up for the afternoon. So it's given you hopefully a glimpse of some of the areas that we focused on and what we've been able to progress in a relatively short space of time. And I'd really like to say a massive thank you to the team, because I think at times, certainly as we were getting the COVID fund up and running, you know, everyone was working all the hours possible to be able to really get funding out as quickly as we could in a way that still supported driving long-term benefit in the sector rather than just sort of knee-jerk short-term response. So a massive thank you to them, and also to all of the organisations that we've worked with. And I already gave a shout out to Esme Fairbairn, Carnegie, who've been fantastic in providing secondees to work with us as we've gone through the Scale Up programme, Fair by Design, who've been working with us, and all of the other social investors. I think we've been really, really delighted with the generosity with which people have shared their insight, information and resources, which has really helped us to move at pace. And of course, all of those providers who've actually taken that slight leap into the unknown to work with us on programmes, and probably found they'd signed up for a lot more than maybe they bargained for, but hopefully have got a lot out of it. I'm sure Diane will have a few words to say on that when we move on to her. So what I wanted to do now was just start to sort of move on to, well, you know, okay, so that's our look back. But, you know, we're now in a situation, as many of you know, we had the real privilege of being allocated additional funding from DCMS so that we can actually do more, recognising that the context has changed. And so what we wanted to do was just have a little bit of a chance to just explore that. How has the world changed? How are we looking at it? How are we using that insight to inform what we're focusing on so that we can continue to make the most impact here and now, and also in driving longer term systemic change that is absolutely fundamental to us existing. So maybe if I just do a sort of a step, you know, none of us have got a crystal ball. Or if anyone has, then please pop that into the Q&A and chat, because then we can actually hand over the session to you. But in the absence of a crystal ball, how do you actually plan in uncertainty? And what we've done is invested time to really set ourselves up to be agile, to be able to identify what are the key uncertainties that we need to really understand and monitor how those are moving so that we can make good choices on a month-to-month basis as well in terms of our longer term strategy. And so we identified really sort of key areas, and I think with really sort of looking at how does that affect the number of customers that are actually impacted, and the specific categories of customers where there are different circumstances impacting them. And also what is happening in terms of the provider market and the tensions those externalities are putting on them that actually inform how we work with them. And so we've set ourselves up to really be able to understand those now and also identify the data that we can track on an ongoing basis to see how that is moving. So what I wanted to do now was just have the opportunity to spend a little time with people, just really sort of exploring, I guess, the critical aspects in terms of uncertainties of what are we seeing in terms of how customers are behaving and how the world is changing for them, what is happening in the broader market in terms of the overall financial services, and then particularly really sort of looking into with Diane, how providers are responding in an innovative and agile way to probably sort of circumstances that I think it's called the black swan event, isn't it? I think something we'd never envisaged. So what I wanted to do first off was have the opportunity to turn to Sian Williams, who does a lot of work really understanding customers at Toynbee Hall, and to really ask Sian, you know, how has the current crisis impacted customers in vulnerable circumstances, both in terms of, you know, different groups of customers, but actually the overall dynamic. So I'll hand over now into Sian just to see her reflections on those.
Thanks, Sasha. Can I just check that you can hear me? Because as we know, I've had a few problems connecting.
We can hear you and see you. You look fabulous. Thank you.
I even dried my hair for you. There's a lot of data out there. You know, there's a large set of data sets, and you can look at those. A lot of them are being published. So I'm not going to kind of tell you things that are already published and you can read about. Apologies, my pinging is just going crazy and I just have to switch it off. That's Temi saying she can't see me. So I want to talk to you about the work that we're doing across London, speaking directly with people living on very low incomes who have experienced kind of challenges around COVID, particularly around their finances, but kind of financially, emotionally and physically as well. So sorry, I'm getting really distracted. I can't deal with all of these things popping up. I'm just going to get rid of you. There you go. So we've been working with peer researchers across the community, and we've recorded so far around 50 households in depth, kind of talking about what's happened for them and what have they told us. So through a series of diaries and films and pictures and all kinds of ways of capturing information, they've told us that over half of them have experienced a significant reduction in income. Over half of them have said that they've gone without food, they've gone without services, they've gone without really crucial things that help their family thrive. And the largest losses in terms of a single household income loss have primarily been for those people who work on a self-employed basis. So they're cash in hand, they're working in the gig economy in some way, not necessarily kind of whizzy tech stuff, but you know, maybe delivery drivers, taxi drivers, Uber employees, those kinds of things. So people who are signed up in a self-employed way. And we've seen losses of over, you know, £2,500 a month income for people who are self-employed. They've also experienced significant increased expenses. So food and groceries, 85% of those 50 households are saying that they're really struggling to manage to cover their food and groceries costs, partly because they're scared of what's happened through the lockdown around hoarding, and they're experiencing it in a way that, can I just check that I'm still live? Yes, good. Sorry, couldn't see anything. Thank you. I suddenly thought I could be talking to myself. So they're experiencing around them people with money bulk buying, then there's nothing to them, and so then they're forced to bulk buy and they don't have the money to bulk buy. So they're having to cope with restructuring finances in a way that they just weren't prepared for. Obviously, some cost prices have already gone up, and so they're struggling with that as well. They've also, because of the reliance on the need for phone and internet, particularly if they've got children and they've needed to do homeschooling, and most homeschooling has been done through digital, their phone and internet costs have gone up. And again, 85% of those households have said that they're experiencing unmanageable costs around phone and internet. And then the kind of third aspect that people have really flagged is their need to support others. And that isn't just in the UK, that's also overseas. And so they've got an issue where they're trying to send money overseas to people who are really struggling. They're experiencing significant problems around accessing cash. ATMs have gone out of use, people have hoarded money, post office cash machines, ATMs are not being filled, and they're people who rely on cash. And that has a knock-on impact. So, for example, there was nowhere to charge their gas card, their utility card, their prepay meter. And so they were really struggling to get to somewhere where they could actually top up their prepay meter so that they could actually pay for utilities at home. How are they coping? They're finding extra work, and that extra work is often in very, very risky situations. You know, they're on the front line in supermarkets or doing kind of driving or courier roles with very little support. They've used their savings. 30% have said that they've used all their savings. They've borrowed 11%. So kind of, yeah, what, 5-10 households have said that the only way they managed was to borrow. And they've been carefully budgeting. But despite all of those mechanisms to cope, 54% of those households have said they've had to go without significant things. So income has dropped, prices have gone up, and they're also feeling that they've got more people that rely on them both here and elsewhere. And so they've struggled to access the most basic services on less money. So it's a dire picture, and we expect that to continue. And as we keep gathering data, we expect to hear even more difficult stories. So I'm really excited to hear about the solutions that we're working on.
Thanks so much, Sian. And I think that sort of real reflection that it's been an incredibly challenging time for so many people across the UK, and that it's thrown many more people into challenging situations than we started with, which is one of the reasons we were allocated additional funding. What I wanted now to was just to turn to Tom to just give us the picture in terms of, so how is overall financial services responding to it? And then Tom, what would be great is if you can then hand direct into Diane to pick up her experiences as how affordable providers are really responding in ways that are giving support in a challenging situation to this customer base. So Tom, tell us more about the overall market.
Thanks, Sasha. It's been an incredibly challenging year for providers of credit, and I think in a lot of ways it's a bit of an inflection point where providers have had to adapt really quickly, and then going forward things just won't quite be the same. And it's also quite clear that no part of the market operates in isolation. So we think about, we make distinctions between high cost credit, affordable credit, and then mainstream credit. And there are clear distinctions between them, but it's also clear that one changing would operate in another area of the market, because customers are in real need of finances. So in terms of the high cost credit market, over the last 6 months, and going back 12 months before that too, we've seen a lot of exits from providers, which has been precipitated by fines from the Ombudsman, particularly around malpractice on affordability. So two really significant exits are Wonga and Bright House, and there are a bunch more as well. And on the one hand, there will be customers who are not kind of in negative credit experiences because those providers have gone, because it was clear that bad things were happening. But on the other, that has left a gap in the market where customers still need some form of financing, and there's perhaps nowhere to go, and that could push customers to more unregulated forms of credit. So as an affordable and mainstream sector, we probably have a responsibility to try and fill those gaps with the right types of credit. In terms of the affordable credit industry, and Diane will talk more about this, but from what we've seen this year, it's been quite turbulent. So during COVID, there was a real drop off in lending initially, and a lot of uncertainty around affordability, which meant that lenders just weren't able to get the credit out there as they were before always. That's now starting to pick up and is getting towards the pre-COVID levels of lending, which is positive, but it's still a real challenge, and there might be some smaller providers in particular who are particularly vulnerable to the situation still. And then lastly, just to highlight what's going on with the mainstream sector, and it's clear that they've played a really important role in helping the country out through COVID and helping individuals through things like 0% £500 overdrafts, which I think 28 million customers in the UK have used, things like payment holidays and on credit cards, loans and mortgages. So all of that support has been like really pivotal for making sure that customers don't go into further hardship during the crisis. And we think that that's been great, and it provides a platform for that kind of work to continue as well. So we'd like to work with the mainstream sector more and partner more with them to take this agenda forward and build further collaborations to get the right credit out there, and indeed other financial services provision. The last thing I was just going to point to was around the increase in savings levels around some demographics. Now, this isn't the demographics that we're talking about. Generally, customers in vulnerable circumstances have had a really difficult time, as Sean highlighted. But among some better off demographics, people have been able to save quite a lot of money during the coronavirus crisis because expenditure has gone way down. And in the credit union sector, that's the case in some particular providers where deposits have increased. And I think it's an interesting challenge across financial services to try and match up those who have done a bit better and where there's excess to those who really need that funding. And we're seeing that in the credit union sector where there are mechanisms to get that capital out. And I think we'd welcome exploring some other ways to do that across wider financial services too. Okay, I think my time's up there. So Diane, I'll pass over to you to talk about the affordable credit market and the future there.
Thanks, Tom. So it's been really interesting to kind of listen to an external customer perspective almost, and the external perception of the market. And I'm kind of living between those two things, seeing customers and trying to work out how to help customers as much as we can. Some of our own individual experience within the business that I almost want to replay as three main areas that I feel to consider for the industry and the sector as a whole. I think our strength as a business has been around segmentation of customers and constantly pushing the boundaries of innovating how to help. And the crisis has handed to me on a plate, you know, how vulnerable our customers are, but also how vulnerable areas of operating our businesses as well, and trying to find new ways to make sure that we can lend responsibly and that we can check that what we are doing people can afford for the duration. So it's been really important. But I think three, and I'm going to whiz through them because I know time is premium. So keeping pace with escalating complexity, and I'll explain that in a minute. Demand outstripping supply, which I think Tom's talked about in the market, and then driving momentum on innovation. So firstly, taking in order that challenge of how to keep pace with the complexity and the fluidity of changing customer circumstances. I think data can be our friend here, but amidst that urgency to develop solutions, I think we also need to keep asking people what they need and actually listen to what they tell us about how they're living their lives, and then make that almost conditional in that design process and how you're trying to help. That variability and smoothing income, barriers to entry, how to get over that, varying paths to access, layers of different financial problems for each individual. So short, medium, long term, those layers. We're going to need to work really hard with both tech and human thinking so that we can translate those complex and transient customer circumstances into easy to configure, joined up, tailored products and services. We should be hyper aware of that lure towards efficiency and convenience of cashless and digital transactions for all. it risks greater levels of exclusion for some. And what we'll really be doing is simply transferring the pressures of the financial system to the social welfare system. So the pressure will just move from one place to the other. A closer collaboration between service and support organisations, and creating that environment for people really to more easily and flexibly switch between that. What do I need in the short term? What do I need in the medium? And what do I need in the long term? So secondly, demand outstripping supply. How do we organise the response to the urgency of demand and the contracting of supply in the market? Contraction of the alternative market is part of the issue, but then if we combine that with the impact of the pace of development or the economic pressures that are narrowing the scope of the services are available, you've got a double whammy there. We're in a complex operating environment. Some organisations won't survive in their current form in the long term. Consolidations are potentially on the horizon to create some economies of scale. It'll have some impact, but it won't be enough to address the gap. I think we need to consider encouraging accelerated development of new entrants, and that could be through collaborations, through partnerships, through joint ventures. It has its own risks, but it could be a potential way to speed up progress as there's less legacy issues to deal with. And absolutely compelling mainstream banks to be more collaborative in this space has got to be a key opportunity in the equation. Finally, a crisis forces innovation. Nothing actually awakens necessity more than a crisis, and invention and kind of innovation follow. So we've got to really, really keep momentum behind that the agility that's been talked about to address some of these unique conditions that were created, and for innovators in the space to freely create rapid and impactful change. So again, use the power of partnerships, and let's respect the vast experience that exists currently, but at the same time, you know, be really bold about innovation and challenge to all those entrenched ways of thinking. You know, I'm looking forward to coming out the other side. Thanks.
Thank you so much, Diane, and to Sean and Tom. I think that was a brilliant sort of tour de force of a whirlwind insight into the world in which we're operating, and very much welcome. I can see there are quite a lot of questions coming through, so please do keep posting those. So what I wanted to do now before we head into questions was just spend a little bit of time sort of saying, with all of that that's happening, it was really important that we actually just took a step back to actually refresh our strategy and make sure that we were actually responding to a lot of the fantastic feedback that we were getting. Inevitably, despite all that we're proud of achieving, there are things that we haven't been able to do that we might have wished to do, and that others might have wished to have seen us doing. So I think that that's that open and honest feedback and challenge to us has been incredibly helpful in helping us to really challenge ourselves as we go along as to, are we paying attention to the right things and how can we make more impact? So please, that ongoing engagement, please do continue that. And I hope that you'll see, as I sort of share with you in an overview how we've actually taken that on board, you will be able to recognise that a lot of your feedback has already informed how we're pivoting to make sure that we really can spend our time and energies on what matters most. I think one thing I wanted to do before I maybe share a screen, just to give you a little bit of an overview, was just pay attention to who we're talking about. One of the conversations that we've had is sometimes there is an assumption that as to who people in vulnerable circumstances are, and that, you know, that they're people who aren't working. Let me be absolutely clear that in the UK today, there are an awful lot of people who are actually in really challenged financial circumstances who are in work. And they are often put into difficult situations because of circumstances outside of their control. So life events, COVID is a fantastic example of that, unfortunately, where there's a big life shock that actually changes things substantially for people. health events. We already know that, for example, people with cancer are often put into very challenged financial situations, not just because of loss of earnings, but actually increased costs of keeping heating on when you're cold, when you're going through chemo. So we're really learning so much depth in understanding what is happening for people. For the purposes of our work, what we've tried to do is really sort of think about 3 different groups. Those who are stuck in debt, so about 3 million people who are really stuck in this sort of place. Those who are maybe in more stable income, but low on benefits, and about 4.5 million people uniquely fit into that group. And those who are precarious or newly precarious, which is another 4 million people, where sometimes a sudden drop of income has left them in a situation where their expenditure is way above their income level coming in. And so we're really sort of looking at it from that perspective, so we can track how those groups are moving and changing. And we're also paying attention to the fact that there are certain groups who are systemically disadvantaged. And it won't come as a surprise to probably anybody on the call that that is often women, people living with disabilities, and people from certain Black and ethnic minority communities. And so one of the key things in our work is, through Hanadi's research, is really making sure that we're having the data to ensure that everything we're doing is really reaching those who need it most. That's pretty fundamental to our approach. So what I wanted to do was then just take you through just a sort of a brief overview in terms of summary of how we're approaching it. So let me just share my screen with you. This is always that joyous moment if, where you just make sure that it all works. And I'll just make it bigger for those of you like me who might be in the situation where your arms aren't quite long enough to make everything look beautiful. So in terms of our refresh, it's probably worthwhile. Everything is anchored in our mission, which is about increasing the financial resilience and well-being of people in vulnerable circumstances through improving availability of fair and accessible financial products and services. It's quite important that we're just really clear on that. We have our sister organisation, the Money and Pension Service, which is very much focused on financial education and advice. We work really collaboratively with them, and we're also very mindful that we need to be focused in how we leverage and use their work, but don't stray into trying to do their job as well. Ours is quite big enough on its own. Richard touched at the start in terms of, what are the beliefs that we have that are actually informing our approach, our theory of change. And really this first one, in terms of financial services can and should serve people in vulnerable circumstances, is really addressing this maybe belief out there that it's not possible to do this in a sustainable way. What do I mean in a sustainable way? I mean without losing lots of money. And what we've actually been able to do, working with the affordable credit providers we're working with so far, is show actually do it right, and you can. It's not easy, and there are some fantastic opportunities to improve that. So that's the first one. We actually believe that you can and you should do this, and that it is possible to do that in a sustainable way. The second one, about fair products and services improving people's well-being. And all of our work, we're really trying to make sure is evidence-based. And you'll notice that as we come through, that we're always looking to develop a hypothesis, to test it out, to build out the evidence, because we believe that's how you actually create system change. And also saying that financial inclusion is the responsibility of the whole financial services sector. I'd go further than that. I think it's a fantastic opportunity. If you look at where we are now, there are so many people in the UK moving into this unpredictable lives, unpredictable incomes, and actually looking at how we can do that well as a whole sector is how we will improve lives of so many and also build better and stronger businesses as a result. All of our work is actually focused on looking at, are we actually changing the system for the better, so that when we don't exist anymore, we have left the system in a place that we're proud of. And so we've set out there for you the key questions that we use to keep ourselves honest and also underpin our own organisational impact reporting. And so that when we're working with providers, when we're working with grantees, I know sometimes there is sort of a bit of hands up in horror at the data that we're wanting to collect, but that's because it's by gathering that data, we're really able to evidence and build a case for further investment in the sector by proving that doing it works well for people and works well for businesses too. So that's why that's at the heart of our approach. So what I wanted to do was just give you a very quick overview of the areas of priority. And you will, those of you who've been reading all of our newsletters and attending our webinars through the year, will hopefully notice that this is really developed through the input that we've had from so many of you during the year. So the first priority is one that is very much the area that we started. That was because it was identified as the area where it was probably most possible with our funding to make the biggest impact quickly to the biggest number of people. That's why we started there. And within the affordable credit provision was this idea of this 10 times challenge of recognizing that there just wasn't enough provision in the market for people who would benefit from it. And the lack of that provision was causing them harm. That was the fundamental principle that we were working with. And in this area, we've really been working on 3 different aspects. The first was, let's actually really make sure we can get some patient capital into the sector, as Holly spoke about earlier, and to really drive a model where actually providers have got affordable finance themselves. Let's make sure that we can actually get grant support in and using our funding in ways that are scarce, and then using that to be able to leverage additional funding from the mainstream marketplace, which is fundamentally what is needed for scale. So that was number 1, and you'll have seen there's been a lot of work done on that already. The second was actually really supporting organisations who had just done so much to actually build the capacity and the capability for the next stage in the growth journey and scale, which Tom talked about earlier. And the third aspect that we think is absolutely critical and is a area of focus as we go through the autumn are the routes to market. It's all very well if we create capacity, but if nobody can access it, then actually we've got a problem. If people aren't aware of it, we've got a problem. So that routes to market is an absolute critical area of strategy going forwards. The second one is a new bucket, which is, I like to call priorities buckets. It's there we are, it's an interesting thing, is really looking at how we can make sure that we're working with people to identify where are the opportunities for innovation that could be transformational, where without our intervention, individual organisations may not have the bandwidth or capacity to pursue them, but with our support that we could actually catalyse taking those innovations forwards. And we've got really 3 different aspects. One is product development, and so for example we're currently working with Toynbee Hall, Fair by Design and Treasury in how we can actually take all of the work that had been done on no interest loans into a pilot programme. So we're working very closely on that, for an example. We're also then looking at market transformation opportunities, and I think that there are so many people who've learnt so much about what's possible in the sector that actually people sort of saying, well, actually, now we know what we know, if only we could, is the sort of the opportunity for innovation. And people like Diane and Lisa Pickard and Angela Clements have been terribly encouraging to us to help us create the space for this work. And so that's exactly what we're going to do. And also to make sure that we're paying attention to the whole toolkit of resources that can make a difference to people. So particularly thinking about savings and insurance, which are very much part of our route map of things that we want to pay attention to. And then the final bucket is just really looking at partnering with the mainstream financial services. I think mainstream financial services have really, stepped up to the challenge that COVID presented. I think every organisation found themselves suddenly overwhelmed with the number of people to deal with and had to adapt very quickly to be able to put the right support in place. And I think that they've done that well. And so what we're now looking at is, right, how can we work with them to support them in a challenging environment to operate any financial services business, to be doing things that will actually really help the whole sector support this customer group better. And so we are still working on the debt fund to have participation from banks so we can provide that debt capital for organisations that are focused on serving this customer group to help them to do it brilliantly well. We're also going to be exploring how they can actually support their customers through both what they do, but also importantly, referrals into providers who specialise in looking after this customer group. And we've had some fantastic early conversations with banks in that space. And then the third area is just looking at, well, what is the long-term framework and structure that we need to put in place to actually help the UK build a system where we can actually make the most difference. So that was a very brief overview of the areas that we're thinking about. We actually have our full board meeting this afternoon where we're actually going through our strategy in detail. So Richard, I hope I haven't overstepped the mark and let too many cats out of the bag. But I think with that, I can hand over to you so we can actually see what the audience is most interested in hearing more about. So thank you.
Okay, thanks Sasha, and thanks to the rest of the team. We are, as ever, tight on time, but it's great you've submitted so many questions online, and we're going to start to try and go through them. The first set of questions is for Holly, and these are all to do with the perpetual bond. And I think there's three parts to this question, Holly. It feels a bit like University Challenge. The first part is, can you say a little bit about how the idea of the perpetual bond was developed? Was it developed by us, the innovation side of it, if you like? The second part to that is a little bit about how does the impact return relate to the financial return? So say a bit more about that, please. And the third piece is an outputs question. So is the result of the impact bond a reduction in the financing costs for Fair4You? So over to you, Holly.
Great, thanks, Richard. Yeah, so I'll talk I could talk for kind of hours about it, but I think probably a shorter answer is necessary, given how many questions we've got to get through. In terms of the kind of perpetual bond, I think there's a huge amount of credit to lots of different people, none of whom are me, because this was well before I kind of joined kind of Fair4All. I think Richard and others in the team did a load of work. The existing foundations and social investors worked very hard, and Fair4You, particularly the CEO and the chair, were absolutely kind of instrumental in putting this together. So I think kind of it's that collaborative approach that's kind of really necessary. There's a lot more coming out about this particular instrument. Esme Fairbairn have just published a kind of a short report on it. It's touched on more in the impact report that Fair4You published, and I expect and hope there'll be similar financing kind of mechanisms kind of coming up in the future. It is an area of really geeky specialism of mine. So if anyone has very detailed questions about it, please do drop me an email, because yeah, I get far too excited about kind of the ways in which you can kind of use finance to really support organisations to kind of grow. So I'm happy to take detailed questions offline. Just in terms of the kind of the impact return. So yes, it has reduced Fair4You's financing costs. One of our aims as a kind of a social investor, so with our money, is that when we support an organisation, we reduce their financing costs. We know that that is a big cost for some organisations, because they need to borrow money to lend out to customers. It sounds incredibly trite, but it's almost like a key part that makes their operating model work. So the financing costs are probably particularly important in the affordable credit sector versus other parts of the kind of the social sector. And I think particularly for social investors, foundations and kind of other interested parties, that's a kind of a real differential for the affordable credit sector versus kind of other social investments that might be made. And in terms of the kind of the impact adjusted return, so actually there'll be more coming out on this probably kind of 6 months or so time, when we're kind of ready to kind of talk a bit more publicly about it. But very broadly, for each of the kind of the equity investments we make, we set up a kind of a small committee to kind of really kind of drill into actually how can we best measure the kind of what the social impact is. Lots of that social impact doesn't have an economic benefit and is crucial. Some of it does have an economic benefit. Kind of how can we kind of take a view there, and kind of with Fair4You, for example, we were confident enough about their impact and have been very quick to kind of start measuring it, that we started at the impact adjusted return, and they have to almost like increase their evidence of impact to kind of keep it at that level. Richard, that's probably it on that.
Okay, Great, thank you, Holly. And sticking with the theme of impact, there's a question which basically welcomes the Fair4U's recent report on social impact. And the question is to us, though, as to how we can help other responsible lenders to measure, gather, and report on their respective impact, so we can really track that for the sector. Tom, do you want to handle that one for us?
Sure, thank you, Richard. Yeah, it's a great question, and I think first principles here are that impact measurement is a really important way that we see the sector demonstrating its benefit to the wider policy environment, to government, and to people across the commercial sector too. And lots of great work has been done in it already, but we definitely see opportunity for more across the wide CDFI and credit union sectors, and also financial services more generally. So we'd like to see impact reported at the level of the impact on the health and well-being of customers. So that's as we talked about with Fair4U, that the impact on things like sleep and visits to health service, but also like children's attainment and school attendance, and all of those things are really important. We will be developing assets and tools to help the whole community finance sector to come, I guess, to get to a point of impact measurement that we think is in line with the Fair4U work and can demonstrate some of the great benefits of community finance. So we're developing specific assets and tools that help the sector right now, and we'll be publishing those probably in the next 6 months, actually. So we'll come up with an impact framework which we see as a good standardized approach, and we'll disseminate that among the sector.
Okay. Thank you, Tom. Thank you, Tom. Very helpful. One more question for you while we've got you in focus. A question from Northumberland Community Bank. We're an affordable credit provider. We started off tiny, and despite a 256% increase in new members in 2019 and a 50% hike in the value of loans granted, we're still small, but perfectly formed. I wanted to make sure I included that. Thank you, Lauren. How are you feeling about helping smaller organisations that have great potential?
Thanks, Richard, and thanks, Lauren, for the question. Good to talk to you, even though we can't interact properly. So it's a great question, and we've been doing a lot of thinking about the future picture of the community finance market, and in that future picture, every provider is really, really important. So we definitely see that there's a crucial role for community-based, small regional credit unions and CDFIs that are highly specialised to their local area, have deep knowledge there, and can sustainably serve in that area. And we would like to work with you to scale that type of provision. The way we work with you, it could be different to some of the larger providers where we aim for significant scale, but we are thinking about a future picture of the market where perhaps some of the credit union space is consolidated a little to try and share assets and processes across providers. And we think the model of a QSO, so credit union shared services, is really interesting too for doing that. And we always think about sustainability, and we think that providers coming together can get to some of that sustainability and get to more customers, as we know customers need these services. So I think conversations about that consolidation picture are really interesting, and some providers would want to consolidate and some would want to stay very local. And we'll have strands of work which cater to both of those modes of operation. Yeah, hopefully that helps.
Yeah, thanks, Tom. So the next question is coming to you, Sasha. This is from Nigel Bailey at CitySave Credit Union. Affordable credit provision in England is highly fragmented and populated by numerous small and lightly capitalised businesses, some of which only survive courtesy of grant awards. There is a danger that grants defer the imperative of standalone sustainability and weaken the appetite for critical actions such as local mergers and sensible credit underwriting, with write-off of loans being the single biggest threat to sustainability. What safeguards are being considered to ensure grantees demonstrate sustainability when grant support has been exhausted? And I know this has been a key question for us as we've looked at many of our grant and investment programs. Sasha.
Hi, thank you, Richard. This is a brilliant one because I can see Holly on my screen who you can't, who could answer this question as well and better than me. But as the screen's on me, I shall do it. I think it's a critical question because actually looking at sustainable business models is at the heart of this, and to really be able to prove what makes an organisational sustainable is a key aspect of what we're doing. So when we're actually looking at people applying to our funds, we always actually ask them to submit their business plans, their business model, and for us to be able to assess some of those key aspects within what we think are appropriate ratios for a sustainable model, which includes bad debt write-offs. I think that, you know, one of the challenges we often hear from some of those that are really dealing with the very poorest in society is that they want to be able to give all of the support and help, but, you know, no one can pay for it. And I think that is part of the business model conversation around how do you make sure that you've got the right customer mix that you can deliver a cross subsidy within your customer mix so that you actually have a sustainable business. I think the other thing that's probably important is the product mix and actually identifying what are the appropriate products to people and how you actually build up their financial resilience and sustainability. And there are some fantastic examples of people doing savings alongside, giving debt advice alongside, all of those sorts of things that are happening in community organisations. And I think the third bit is scale. You know, particularly lending is a scale business. And so, you know, finding those ways in which we can help facilitate mergers where they're appropriate and also facilitate back office, sort of using the same back office where appropriate. Those are just really great ways to be able to retain the sort of the cold face sort of support to people whilst minimizing all of the other costs that are actually existing in the business model. So we're exploring each of those, but I think that the fundamental is anyone applying to our program, we do look for sustainability or a plan to sustainability. If we think they're serving a great area and don't have a plan, we do often look at whether there is different support we can put in place to facilitate mergers or a path to sustainability. So we don't want to lose support altogether in those more challenged areas. Thanks, Richard.
Thank you, Sasha. Thank you, Sasha. Actually, there's a couple of questions coming on technology. So Jonathan, I think these are coming to you. The first question I think is around basically technology is clearly moving very quickly, particularly in the context of COVID. So how are we working to share the technology innovation between often this fragmented market? So what are we doing to kind of share the knowledge? And the second question is, you know, has it changed our plans in terms of our potential engagement with fintechs and the venture community? Jeremy at Big Society Capital has commented that they've seen an increased interest in that area, but perhaps, you know, we could help to bring a greater degree of understanding to that area. So very similar questions. And the final bit of Jeremy's question, I think, is around how do we balance our work here with many who actually face tech exclusion? So Jonathan, maybe over to you.
Yeah, so actually this is very, yes, kind of front and center of the world that I'm living at the moment around technology. So yes, the COVID experience around technology has not really changed the way that we've thought about technology, but it's certainly accelerated our thinking. And there is an urgency for some of the lenders who currently don't offer a digital customer journey. That doesn't just mean acquiring loans, it means servicing loans and savings products. so there's a sense of urgency to resolve that and provide a digital journey for those people when branches are closed, and also to engage with people as if they were engaging with mainstream technology or mainstream financial services, I should say. So what we're doing is we're working with technology vendors who are currently servicing this sector, and trying to make them successful in developing their product that is appropriate and is well communicated with the market. But we're also looking at mainstream fintechs, and that was part of the question: is how do we engage with the mainstream fintechs? And really, COVID has presented an opportunity in that regard, insofar as mainstream banks are generally not investing in large-scale technology innovations at the moment, which is leaving some of the suppliers who have been supplying to mainstream banks with capacity. And so we have been talking to those organisations with a view to explaining to them what the sector is, what the sector looks like, what are some of the nuances that they need to deal with, and inviting them effectively to be part of this community. So it's really a case of engaging and helping to explain. And we're going to be doing this with a paper that we're going to be writing collaboratively with other organisations, but explaining where technology is at the moment in affordable credit, and who's currently serving it, who's currently serving the market, and also a call to action to lenders that they really need to have a 4 or 5 year plan for where they're going to be taking technology, so that it's not a piecemeal approach, but it's a strategic, thought through approach to technology. The final question, the final part of the question, then I'll shut up, around balancing the technology work with people who face technology exclusion. It's a really good point, that, because the last thing that we want to do is encourage a market that goes solely technology led, leaving people who are already in vulnerable circumstances in even more in an even more excluded environment. So it needs to be a part of the solution. So technology and digital customer journeys needs to be part of the solution, but we fully acknowledge and fully recognise that face-to-face branch engagement is still going to be an important part of the market.
Thanks, Jonathan. That's great to hear, and I know it's such a central part of our work. There are 2 final questions I want to just make sure we get to in this part, and thank you all for posting the questions, as I thought there's more than we will have time for here, but we will, as I said before, come back to you at the end of this session. The first question is about, so you were set up to deal with financial exclusion as a whole. You've talked a lot about affordable credit. Can you say a little bit more about what you're doing on that broader theme? And Tom, this one's coming to you. What about insurance and savings? When are we going to get around to talking about that?
Thanks, Richard. Yeah, so we prioritised access to affordable credit per the kind of instruction from government and DCMS last year as the first area that we should work on, and that's because of the pressing nature of the issue, and particularly the harm that is caused to some customers when they go without. They're with certain high-cost credit providers, or they have to rely on illegal money lending even. So we prioritise that for good reason, because of the amount of harm out there. Savings and insurance are very much part of our future strategy, and Sasha spoke to them just now, going through our priorities there. And we would like to support savings and insurance products that result in customer benefit in the same way that affordable credit does, and we'll be specifically developing out those approaches over the next year or so. And we know it's a really important part of the picture, and I think they come into more of the preventative area than credit. And if we can help customers kind of more downstream before they get to crisis point by helping them have the right, say, insurance for their goods in say a social housing environment, where we know that take up of insurance for household items is really, really low, and that if there's a crisis point such as a flood or a fire, then that is often a cause of financial hardship. So insurance is a really important way to prevent harm before it arises, as is savings, and it's all about that savings buffer. And we know that there's 12 million people in the UK without £50 in savings, which is really, really stark, and will be, well, we already work with say Moneyline and a few other providers to building savings approaches to credit, so it's kind of a few pounds back on into a savings account when someone repays a loan. We'd like to do more of that, and also work with other savings approaches, maybe things like expanding the government's help to save, and doing what we can in terms of the private sector to expand that out. So they're very much part of our agenda, and within the next year we'll be developing specific programs in those areas.
Great, thank you, Tom. The final question, I'm going to hand it to Sasha, and then just invite Sasha to close this meeting following her answer, is to do with the fact that, you know, in this year, of course, it will be remembered for COVID, but it'll also be remembered for Black Lives Matter. So Sasha, can you say a little bit more about how you see the interaction of our work with racial justice and making sure that everything we do takes account of that, and that we do manage to reach out into, you know, all ethnicities?
Thank you, Richard. Absolutely critical question. Fundamentally, we're an organisation that is here to address inequality in society, and to do that brilliantly well, we need to understand the systemic inequality, not just how it might present on the surface. And so we've committed as a team to, firstly, I think, shining a light on it to get a really good insight into how that plays out in the respect of financial services and financial exclusion. And from our data, there are already some scary stats where we can't necessarily correlate it yet, but it gives you an insight that there is definitely an issue to be looked at. So, for example, in terms of fraud claims that are coming into banks where there's been financial fraud, 1 in 5 of those that are turned down are from people from Black or other ethnic minority groups, whilst they only represent 10% of the population and 10% of claims. Now, I'm not going to say what that means. We don't know yet. It does always provoke the question as to why that might be. So shining a light on the data is our starting point. And we're working with all of our providers to say that anyone that we're working with, we want them to be able to collect data so that we can understand, are they actually reaching into communities, and are there any disproportionalities in terms of people rejected for services, all of those sorts of things, so that we can understand, is there inherent bias in the system, and how could we protect against that in the delivery of financial services. So that shining a light, I think, is the starting point. I think that we've also, you know, really started working as a board on our own anti-racism training to make sure that we fully understand the systemic nature of the challenges, and are really then building out our full diversity, equity and inclusion strategy, so that paying attention to this as part of driving an equality agenda, which is effectively what we're doing, that we're always asking the right questions at each stage in who we're working with, who we're employing, who we're providing investment to. So we're at early stages of the journey, but equally would really welcome anybody who has further insights and wants to join us on that challenge. It'd be fantastic to have you involved. So look, I'd just like to thank everybody for giving time today to join us. and it would be fantastic to get your feedback in terms of the format. We wanted to make it really an opportunity to have a conversation with you as much as is possible over this format so that we could explore some of the issues. And thank you so much. The quality of the questions has been fantastic. I'd like to thank Sean and Diane, who've given us some fantastic external insights. I'd like to thank all of my team who've actually provided input, everyone who's collaborated with us over the year, but I'm going to reserve special mention for Temi and James, who have been behind organising this. And Temi, you did a fantastic job. You managed all the transitions, and I'd just like to say thank you to both of you, because even doing something like this online, there are an awful lot more buttons to press in the background than you could possibly know. And so with that, what I'd like to do is close our first formal AGM, and I'm just going to hopefully share our thank you slide, which is just the final thank you to everybody. We couldn't have done it without all of the people who've collaborated with us. So thank you so much for the time and energy that everybody has given to us, and we really look forward to continuing our work together. Thanks, everybody.